Hi, everyone, and welcome to the CLA Outlook. I'm Susan Ross Wells here with Chris Dhanraj, our Managing Principal of Investments for CLA Wealth Advisors. And we're just taking a look at our economy, where we are and where we're headed in the rest of 2024. And first, I want to start off, Chris, asking you why we decided to even create the CLA Outlook to begin with.
Well, Susan, glad to be here with you. At CLA, we have such a treasure trove of information. And that stems from the fact that we serve over 200,000 clients across 130 locations with 9,000 family members at CLA. All this information is so valuable when you think about the economy, industries, policy, and markets. And we use this information in our Outlook to advise our clients.
And I'm curious if, there's some visuals that can help you in conveying some of this information to folks who maybe don't understand some of these principles the way that you do.
In the simplest terms, Susan, we really can think about this in four spokes. The CLA Outlook really has a section dedicated to the economy for our economic section, industry, policy, and markets. And behind those are other megatrends, such as workforce of the future, stewardship, the historic wealth transfer. All of these things take into account what's happening today and what's going to happen in the future.
I wanted to ask you, when you talk about the outlook, something I'm hearing from you is a real optimism about sort of a normalization of the economy in general and a resilient economy in the rest of 2024 and also into 2025. Can you talk about sort of your optimistic outlook right now?
Yeah, it's easy to be optimistic, but when you have thousands and thousands of data points, it actually reinforces the validation behind the optimism. We're seeing that the consumer remains strong. That's 70% of our economy. We talked to our industry leaders across 16 different industries. They are seeing a turn of the tides where businesses are becoming more constructive. And so all these data points are incredibly important to validate the research that we're doing.
I'm curious, we hear optimism, but also there's a lot of uncertainty in the economy right now. We've got these higher interest rates that won't let go, and also the election is approaching, the presidential election. How does that uncertainty play into all of this, and are there actually opportunities for businesses?
There's something called a wall of worry, where the economy, the markets, participants focus on the one big thing today, and they ignore all the other things going forward. That one big thing today is interest rates. And so when you think about the impact of the consumer, impact in terms of cost of capital to businesses, that is certainly something we're looking at. But that fear is receding. There are other things we're watching very carefully, such as geopolitical risk, such as election risk, and even other areas such as AI and other types of technologies that might disrupt industries.
And when you talk about actions, I'm going to take that one step further and sort of put you on the spot here a little bit, but ask you if you could speak directly to business owners and individuals out there right now in this time of uncertainty. What would you suggest as action items to maybe protect their investments, their wealth?
Yeah, for most business owners, their biggest cost is labor and certain types of processes. And when you think about how do they think about that cost of labor, which remains elevated, it's about automation. It's about using digital and other types of outsourcing practices to really think about that cost structure and contain it. The other thing I would mention is that for individuals, higher interest rates are also a tailwind in the sense that you can actually park your cash in a place that earns higher than the rate of inflation. And so most investors, most individuals, most business owners even, take their cash, their working capital, and they just leave it in their checking or savings account, earning near 0%. We want them to actually think about cash management and put steps in place that they earn that higher interest rate.
Before we wrap up, I wanted to ask you, is there something you can share with people, maybe something that I don't understand, we don't understand, sort of the CLA insider's view on a particular piece of, the economic outlook that we should watch for or keep in mind moving forward?
Absolutely. There's something that's really interesting. When you think about higher interest rates, the first industry that people think about that is at risk is real estate, because real estate and higher interest rates really don't go well together. Well, we're actually seeing signs of stabilization here at CLA. Speaking to our industry leaders in construction and real estate, we're seeing that the part of the real estate market that's most impacted, which is office, is starting to stabilize. And there are two other parts of the market that remain quite robust. One is industrial assets, and the other one is multifamily assets. And so we're actually quite constructive on real estate as part of an investment portfolio or as part of a business owner's strategy, even despite the higher interest rates. And we think that will be quite robust going forward.
All right. Well, again, I'm sensing optimism from you, and I think that's a good place to leave it. So with that, I'm going to say thank you so much for your insight and your knowledge. And thank you for joining us for the CLA Outlook.